In exactly 47 seconds, you'll discover why your brain is hardwired to buy the top and sell the bottom, and it's not your fault. But first, let me show you something that'll make your stomach drop. GameStop, January 2021. My inbox flooded with, should I buy at 300? Those buyers, down 87%. Terra Luna, April 2022. Stablecoin, can't go down. $60 billion becomes $0 in 7 days. But here's what nobody tells you. The traders who didn't buy, they're up 300% this year. How? They mastered the one thing that separates the 5% who win from the 95% who lose. And in the next 60 minutes, I'm giving you the exact blueprint. What's up, traders? Welcome back to Trading Psychology Stick, the channel where we give you the psychological tools to enforce discipline. And rule number 1 is this. I provide the framework, you take the trades. This is a psychological masterclass, not financial advice. Your P&L is your own. Now, let's get started. Part 1, Awakening. The FOMO Trap. Today we're diving deep into the psychological warfare happening in your brain every single time you open a chart. Whether you're trading Bitcoin, EUR, USD, or Tesla options, FOMO is the silent account killer. And look, I get it. Last week, I watched Solana pump 40% in 3 hours while I sat on the sidelines. Every bone in my body screamed, get in now. But I didn't. And that's exactly why my account is up 73% this year, while most are down. Here's what we're covering in the next hour. The neuroscience of why you literally can't help but FOMO. The 5 types of FOMO, destroying accounts in 2024. The exact system I used to turn FOMO into profit. And at minute 47, I'll reveal the tool that changed everything. But first, you need to understand this. FOMO isn't just one emotion. It's 5 different monsters, and I guarantee you're fighting at least 3 of them right now. FOMO monster. Number 1, the breakout beast. You see it every day. EUR USD sitting at 1.1000 for weeks. Then, boom, 1.1050, 1.100, 1.150. Your brain screams, it's breaking out. This is it. Moon time. Reality? 73% of retail breakout trades fail. Why? Because you're buying after the move, not before. Last month, Bitcoin broke out above $38,000. Twitter went crazy. Next stop, 50K. Where is it now? $35,000. Those who bought the breakout? Underwater. FOMO monster number 2. The news nightmare. December 13, 2023. Fed announces surprise rate decision. EUR USD spikes 200 pips in 3 minutes. Retail traders see the news 5 minutes later. They market buy. Price already reversing. Here's the truth. Wall Street doesn't want you to know. Institutions get news 0.3 seconds faster through co-location servers. Algorithms trade in microseconds. By the time you see it on CNBC, it's already priced in. Case study. NFP last Friday. Expected 150K jobs. Actual 336K jobs. Dollar should moon, right? Wrong. Dollar dropped 1.2%. Why? Institutions were already positioned. Retail caught wrong-footed. Again. FOMO monster number 3. The social media siren. Breaking, whale just bought 50 milliliters of Peppy. My secret coin just did 1000x. Next pick tomorrow. If you're not an XRP right now, you hate money. Sound familiar? I tracked 1,000 influencer calls from 2023. 89% resulted in losses if you bought after the tweet. Average loss, minus 34%. But the influencer, already in, before tweeting. Real example. December 2023, famous trader calls Matic. His entry, $0.51 in private group. Public tweet, $0 and IS 89. Current price, Nairbo 72. His profit, 41%. Your loss, minus 19%. FOMO monster. Number 4, the revenge robot. This one's personal. You just lost $1,000 on EUR USD. Brain. I must make it back now. So you double position size, triple the risk, abandon your plan. I've seen it destroy accounts. Starting balance, $10,000. Loss, number 1, minus $500 or 5%. Revenge trade, number 2, minus $1,500 or 15%. Desperation trade, number 3, minus $4,000 or 40%. Final YOLO, minus 4,000, everything gone. Time elapsed, 4 hours. Career ended. FOMO monster number 5, the exit executioner. This is the sneaky one. You're actually in a winning trade. Bitcoin entry, $34,000. Current price, $35,000. Your brain. Take profit before it reverses. You exit. Next day, $37,000. Next week, $40,000. You, watching from sidelines, FOMO building. Then you revenge buy at $40,000. It drops to $38,000. You panic sell. Cycle repeats. Now, before you think, okay, I'll just control my emotions better, let me show you why that's literally impossible with your current brain wiring. What I'm about to show you will change how you see trading forever. This is your brain making a trading decision, and this is your brain on FOMO. Notice the difference? The amygdala hijack. Meet your amygdala. This almond-sized troublemaker evolved 50,000 years ago to keep you alive. Tiger nearby? Run, food scarce? Grab it now. Problem? It can't tell the difference between a tiger and a Bitcoin pump. When you see green candles, amygdala fires in 0.07 seconds, floods brain with fear chemicals, literally shuts down prefrontal cortex, your logic center. You click buy before conscious thought. Dr. Andrew Lowe from MIT studied trader brains. The fear of missing out triggers the same neural pathways as physical danger. Translation? Your body thinks missing this trade will kill you. The dopamine trap. But here's where it gets dark. Every time you enter a trade, dopamine floods your nucleus accumbens. Same receptor as cocaine hits. Brain craves more. Stanford study, 2023. Day traders show 73% higher dopamine sensitivity. Similar patterns to gambling addicts. The loss makes you crave the next hit more. Real data from 10,000 Robinhood accounts. Average user checks app 97 times per day. Dopamine spike with each check. Trading frequency increases 340% in first 90 days. Account balance decreases 67%. The cortisol cascade. Now add cortisol, the stress hormone. Your losing trade creates a cascade. Cortisol spikes 250%, impairs memory formation, blocks pattern recognition, forces snap decisions. Cambridge study on City of London traders. Morning cortisol levels predicted daily P&L. Higher cortisol equals worse decisions, equals bigger losses. The vicious cycle. FOMO leads to bad trade, leads to loss, leads to stress, leads to more cortisol, leads to worse. FOMO leads to repeat. The professional's secret. But here's what changes everything. I got access to brain scans of million-dollar traders. The difference? Shocking. Elite traders show 68% less amygdala activation during volatility, increased prefrontal cortex activity in logic center, stable dopamine regardless of P&L, cortisol levels of someone watching Netflix. How? They've literally rewired their brains. And neuroscience proves you can too, in as little as 21 days. But before I show you how, you need to understand the 7 mental traps that even smart traders fall into. Your IQ doesn't matter. I've seen PhDs blow accounts and high school dropouts make millions. Why? Because these 7 biases affect everyone. Bias number 1, recency bias, the account killer. Your brain weighs recent events 3.4x heavier than historical data. Example, Bitcoin pumps Monday, Tuesday, Wednesday. Your brain, pattern established. Thursday equals pump. Reality, random distribution. Thursday dumps 52% of the time. EUR USD real data. After 3 green days, next day green only 48% of time. After 5 green days, next day green only 41% of time. After 7 green days, next day green only 28% of time. Yet 91% of retail traders buy after extended moves. Bias number 2, confirmation. Bias the echo chamber effect. You bought Bitcoin at $38,000. Now you only see bullish tweets, moon predictions, positive news. Your brain literally filters out. bearish data, warning signs, contrary opinions, MIT experiment, show traders mixed news. Bulls remembered 83% of positive news, 22% of negative. Bears, opposite, same information, completely different reality. Bias number 3, herd mentality, the sheep syndrome. January 2021, GameStop mania, Wall Street bets. 2 million becomes 10 million members in 7 days. If 10 million people are buying, they can't all be wrong. They were. GME buyers above 300s down 87%. AMC buyers above 60s down 84%. BBBY buyers, yes. Bed Bath down 100%, bankrupt. The math of herds. 10 people buying doesn't equal right. 10 million people buying doesn't equal right. It means you're late. Bias number 4. Loss aversion, the hold and hope disease. Nobel Prize research from Kahneman and Tversky. Losses hurt 2.5x more than gains feel good. Result? You hold losers way too long. Broker data from 100,000 accounts. Average winning trade held, 2.3 days. Average losing trade held, 14.7 days. Worst losers held, 67 days average. The market doesn't care about your entry price, but you do, and it's killing your account. Bias number 5, anchoring, the price prison. I bought your USD at 1,000, so that's my price. Bitcoin was $69,000 once. It'll get back there. This stock was $300 last year. Now $100 is cheap. Your entry price is irrelevant to future movement. The $69,000 Bitcoin buyer waiting for break-even, still waiting. The 300 ARKK buyer from 2021, down 76%. Market doesn't know or care where you entered. Bias number 6, overconfidence, the expert illusion. Study of 50,000 retail traders. Confidence level versus annual returns. Very confident, minus 23% average. Confident, minus 11% average. Uncertain, plus 7% average. Very uncertain, plus 18% average. The more you think you know, the less you make. 2023 Wall Street predictions. 73% predicted recession, didn't happen. 0% predicted regional bank crisis, did happen. Average S&P target, 3,800. Actual, 4,700. If Goldman Sachs can't predict, why do you think you can? Bias number 7, gambler's fallacy, the deadly delusion. EAR USD dropped 5 days straight. It must bounce. I lost 10 trades in a row. Next one has to win. Each trade is independent. Previous results don't affect future outcomes. The market has no memory of your losses. Real data. After 10 red days, day 11 is red 51% of the time. After 10 losses, trade 11 wins 48% of the time, your normal win rate. The universe doesn't owe you a winner. Now, you might be thinking, okay, I see the problems. Just tell me the solution. But here's the thing. Knowing these biases isn't enough. Your brain will still fall for them. Unless... Let me tell you about 2 traders. Both started with $10,000 in January 2023. Trader A took 847 trades, watched screens 14 hours per day, followed 17 signals groups. Result, 3,400 left, down 66%. Trader B took 23 trades, checked charts 1 hour per day, followed 0 gurus. Result, $31,700, up to 17%. The difference, one word, abundance. The scarcity trap. Scarcity mindset says, this is the opportunity. If I miss this, I'm broke forever. Everyone's getting rich except me. Your reality with scarcity thinking. Overtrading because every move looks important. Over-leveraging because this is the one. Overreacting because missing out means death. Brain in scarcity. Tunnel vision. Sees only current trade. Brain in abundance. Wide view. Sees infinite opportunities. The abundance reality. Let me destroy your scarcity with math. Forex. 5.5 trading days per week times 52 weeks equals 286 days. Crypto. 365 days per year, 24/7. Stocks. 252 trading days per year. Major pairs move 100 plus pips. 73 times per year average. Bitcoin moves 5% plus, 67 times per year. S&P moves 1% plus, 89 times per year. Translation? Thousands of opportunities, every single year. Missing one trade is like missing one wave in the ocean. Another one coming in, 3, 2, 1. The transformation protocol. Stanford neuroscientist Dr. Huberman proved 21 days of consistent practice equals new neural pathways. Here's the exact protocol. Morning abundance reset, 5 minutes. Write 3 trades you're grateful you missed. Example, grateful I didn't buy Luna at $100. Calculate opportunities ahead. Today, 8 major pairs times 3 sessions equals 24 opportunities. Affirmation with evidence. The market will be here tomorrow because it's been here 100 plus years. The 10 trade rule. For every 1 trade you take, you must skip 10 setups. Forces abundance thinking. No exceptions. Real result from my students. Week 1, painful. Want to trade everything. Week 2, easier. Start seeing bad setups. Week 3, natural. Only want A+ trades. Week 4, abundance achieved, profits follow. The Buffett principle. Buffett's secret. 20-slot punch card. You have 20 trades for entire career. That's it. Result? You'd be very selective. Apply this monthly. January, 2 trades maximum. February, 2 trades maximum. My 2023 using this. 24 trades total. 19 winners. 427% return. Because when you know opportunities are infinite, you can wait for perfect setups with zero FOMO. But abundance mindset alone isn't enough. You need to think like the house, not the gambler. The Bellagio Casino made $1.27 billion last year. They lost thousands of individual bets, yet they're printing money. How? They understand what 95% of traders don't. The law of large numbers. The casino model explained. Roulette truth. Red-black pays 1.1. But there's 0 and 0, green. House edge, 5.26%. Small edge, thousands of spins. Guaranteed profit. The casino doesn't care if you win tonight. They care about the next 10,000 spins. At 10,000 spins, they're up 5.26%. Mathematical certainty. Your trading should work exactly like this. Trading probability framework. Shocking truth. You don't need high win rate. Real hedge fund data. Renaissance Technologies. 50.75% win rate. 76% annual returns. Paul Tudor Jones. 43% win rate, billions managed. Your favorite YouTube guru, 97% win rate, but broke. How? The beautiful math. 40% win rate plus 1.3 risk reward equals profitable. 100 trades, 40 win times 3R equals plus 120R. 60 loss times 1R equals minus 60R. Net plus 60R profit with just 40% wins. Expected value, the only number that matters. Every setup has expected value or EV. Setup A, 70% win rate, 1.1 RR. EV equals 0.70A1 minus 0.30A1 equals plus 0.40. Setup B, 30% win rate, 1.5 RR. EV equals 0. 35 minus 0.70x1 equals plus 0.80. Setup B is twice as profitable despite losing 70% of the time. My 2023 stats. EUR USD 38% win rate, 1.3.8 RR average. Bitcoin 41% win rate, 1.4.2 RR average. Overall 39.5% wins, plus 273% account growth. I lose 6 out of 10 trades. I'm up 273%. This is the power of probability thinking, the sample size secret. Here's what kills retail traders. 10 trades. Anything can happen, luck dominates. 50 trades, patterns emerging. 100 trades, statistics stabilizing. 1,000 trades, true edge revealed. My worst streak, 13 losses in a row, March 2023. My mindset, perfect, regression to mean coming. Next 30 trades, 21 wins. Why? Probability always wins long term. Implementing probability mindset. The A+ setup. Filter, score every setup 0 but 10, trend alignment 0 dear 2 points. Structure 0 beer 2 points. Momentum 0 beer 2 points. Risk dear reward 0 beer 2 points. Confluence 0 beer 2 points. Only trade 8+ scores. Track 100 trades. Let probability work. Student results after switching to probability thinking. Month 1, -12%. Adjusting, fighting FOMO. Month 2, +3%. Trusting process. Month 3, +18%. Probability kicks in. Month 6, +67%. Total, compound effect. No emotion, no FOMO, just math. Look, I know what you're thinking. This all sounds great, but when I see green candles, logic goes out the window. I get it, which is why the next chapter changes everything. When we return, the exact emotional control techniques used by traders managing billions, including one method so powerful, it's classified by certain hedge funds. Part 2, Adaptation, Building Your Anti-FOMO Arsenal. What you're about to learn is why Goldman Sachs spends $500,000 per year on meditation coaches for their traders. But first, let me tell you about John. John was a forex trader, IQ of 145, MBA from Wharton. Lost $2.3 million in 4 hours on August 24, 2015. Not because he was stupid, because he couldn't control this. His amygdala hijacked his brain for 4 hours straight. Today, he manages $500 million. What changed? He learned what I'm about to show you. Navy SEALs make life or death decisions under extreme stress. One wrong move, mission fails. People die. Sound familiar? Your trading might not risk lives, but your brain doesn't know the difference. The 4-4-4-4 breathing technique. This saved my account more than any indicator. When you feel FOMO rising, inhale 4 seconds. Watch your stomach expand. Hold 4 seconds. Feel the pause. Exhale 4 seconds. Release everything. Hold empty 4 seconds. Embrace the void. What happens? Activates parasympathetic nervous system. Drops cortisol 23% in 2 minutes. Increases prefrontal cortex blood flow. FOMO literally cannot exist in this state. Try it right now. Seriously. Pause the video. 4, 4, 4, 4. 3 rounds. Welcome back. Feel different? That's your brain chemistry changing. The stop protocol. Before every trade, stop everything. Hands off mouse. Step back from screen. Physical separation breaks impulse loop. T, take a breath. 1 deep, 4 to 4, far cycle minimum. Oxygen to prefrontal cortex equals logic returns. O, observe your state. Rate your emotional state 1 to 10, 1 to 3. Too fearful, might miss opportunity. 4 to 6, optimal zone, trade here. 7 to 10, too excited, FOMO territory. P, proceed with plan. Only if 4 to 6 emotional state. Only if setup meets criteria. No exceptions. Ever. The body scan technique. Your body tells you about FOMO before your mind. Chest tightness equals fear building. Rapid breathing equals cortisol spiking. Clenched jaw equals stress accumulating. Sweaty palms equals fight or flight activated. I wear a Whoop band while trading. Heart rate above 80? No trades. HRV below 50? No trades. Your body doesn't lie. The 17-second reset. MIT research discovered 17 seconds of focused breathing resets amygdala activation. My pre-trade ritual, see setup forming, excitement builds. Start 17-second timer. Box breathe entire time. Only then evaluate setup. Results. Entries improved 6-7%. FOMO trades eliminated. Win rate increased 23%. Cold exposure training. Sounds crazy? Hear me out. Wim Hof method for traders. 2-minute cold shower every morning. Trains stress response system. Builds distress tolerance. Makes market stress feel trivial. After 30 days cold exposure, trading stress feels like nothing. FOMO doesn't even register. Try tomorrow. Last 30 seconds of shower, full cold. That discomfort? That's building mental armor. But controlling emotions is just defense. Now, let's build your offense. What I'm about to share is the exact system used by a proprietary trading firm that's been profitable 237 months straight. No guru course teaches this. The 5-layer entry protocol. Layer 1, market structure. Higher time frame trend aligned, key levels respected, no major news in 60 minutes. Example, EUR/USD long setup. Daily. Uptrend, check. 4H. Pulling back to support, check. 1H. Forming reversal pattern, check. Layer 2, technical confluence. Minimum 3 of 5 required, support resistance. Fibonacci level, moving average, trend line, previous high-low. Layer 3, momentum confirmation. RSI divergence, volume increasing, candlestick pattern complete. Layer 4, risk-reward mathematics. Minimum 1.2.5 RR, stop loss beyond structure, target at logical level. Layer 5, emotional clearance. Stop protocol completed, emotional state 4-6, position size calculated. The exit algorithm. Exits kill more accounts than entries. Here's why. Amateur, exits based on emotion. Pro, exits based on algorithm. The 3 target system. Target 1, 1 R profit, take 50% position. Target 2, 2.5 R profit, take 30% position. Target 3, trail until structure break, 20%. Real trade example from last week. Bitcoin long at 34 as instruction 50. T1 hit at 34, that's up in 50s, plus $500. T2 hit at 35 as up in 50, plus 2,500. T3 stopped at 30.7100, plus 2,850. Total, plus 4,150 on one trade. Risk, $1,000. Reward, 4.85R. Position sizing algorithm. The formula that saved my career, position size equals account X riskin divided by stop distance X pip value. $10,000 account, 1% risk equals $100. $50 pip stop on EUR/USD. Position size equals 0.2 lots. Never risk more than 1% per trade normally, 0.5% per trade when learning, 2% per trade only with 10+ winning streak. The system tracker. Track everything. Setup quality score 1 to 10. Emotional state 1 to 10. Entry huge, exit execution 1 to 10. Result in R, not dollars. After 100 trades, patterns emerge. Score 8+ setups, 68% win rate. Score 6 to 7 setups, 41% win rate. Score under 6 setups, 23% win rate. The data doesn't lie. FOMO trades always score under 6. This system eliminates 90% of bad trades. But the next chapter, it's about the 10% that separate good from great. At 4:30 a.m., while you're sleeping, millionaire traders are already winning. Not by trading, markets aren't even open. By preparing their secret weapon, their mind. The 5 a.m. protocol, 4:30 a.m. The wake, no snooze, ever. Feet hit floor in 5 seconds. Why? Builds immediate discipline. Your brain at 4:30 a.m. Cortisol naturally lowest. Prefrontal cortex most active. Zero market noise. Pure clarity. 4:35 a.m. The shock, cold shower. 2 minutes minimum. Wim Hof, breathing during. Norepinephrine spike equals ultra focus. 4:45 a.m. The movement. 20 minutes intense exercise. Increases BDNF. Brain fertilizer. Burns off excess cortisol. Primes pattern recognition. Study of 1,000 traders, morning exercisers, plus 47% annual return. Non-exercisers, minus 12% annual return. 5:05 a.m. The silence. 15-minute meditation. No exceptions. Not spiritual. Pure neuroscience. What happens? Amygdala shrinks 23%. Prefrontal cortex thickens. Default mode network calms. FOMO becomes impossible. 5:20 a.m. The preparation. Market analysis with fresh brain. Top-down approach. Monthly to weekly to daily. Mark key levels. Identify A+ setups only. 5:50 a.m. The affirmation. Write 3 statements. I am patient like a sniper. I only take A+ setups. The market owes me nothing. Sounds silly? Your subconscious doesn't think so. The power hour during market. First 90 minutes, peak focus time. Best setups appear. Take 80% of trades here. Mandatory break. 15 minutes away from screens. Walk, breathe, reset. Return with fresh eyes. After 90 minutes, attention drops 40%. Mistakes increase 67%. FOMO risk triples. The midday reset. Lunch equals no screens. Exercise or walk. helps process morning trades. The evening ritual, 7 p.m., the shutdown. Markets closed or not, you're done. Brain needs recovery time. 7:30 p.m., the review. Screenshot every trade. Rate execution, 1, 10, note, emotional state. Extract one lesson. 8 p.m., the preparation. Set alerts for tomorrow. Clear all charts. Review economic calendar, then forget trading. 9 p.m., the recovery. No screens. Book or family time. Quality sleep equals quality trading. Traders with 7+ hours sleep, plus 34% returns. Traders with under 6 hours, minus 23% returns. Your edge isn't in the charts, it's in your routine. The next chapter reveals how to turn risk management from boring defense into aggressive offense. I'm about to show you why 95% of traders fail, and it has nothing to do with their strategy. Meet Sarah, great strategy, 65% win rate, month 1, plus 12%, month 2, plus 8%, month 3, plus 15%, month 4, minus 100%, one bad day, no stops, account gone. The 1% rule, your life insurance. Simple rule, never risk more than 1% per trade. Sounds boring? Look at this. Lose 10%, need 11% to recover. Lose 20%, need 25% to recover. Lose 50%, need 100% to recover. Lose 90%, need 900% to recover. The math is brutal. One FOMO trade without stops can end everything. The triple layer protection system. Layer 1, the hard stop. Set immediately with entry. Beyond market structure. Never moved toward price. Honored 100% of time. Example, EUR/USD. Entry, 1.0950. Stop, 1.0900 below support. Risk, 50 pips equals 1% of account. Layer 2, the time stop. If trade doesn't work in X time, exit. Scalping, 1 hour. Day trading, 4 hours. Swing trading, 3 days. Why? Edge decays over time. After 4 hours, win probability drops 34%. Layer 3, the correlation. Stop. Never risk more than 3% uncorrelated pairs. EUR/USD long equals 1%. GBP USD long equals 1%. EURA GBP position equals 0%. March 2020, traders with correlation stops lost. 3 made ours to 5%. Others lost 30, that's 50%. The formula hedge funds use, Kelly percent equals win percent x average win minus loss percent x average loss divided by average win. Example with my stats. Win, 40% with 3R average. Loss, 60% with 1R average. Kelly, 0.4x3 minus 0.6x1 divided by 3 equals 20%. But never use full Kelly. Use 25% of Kelly equals 5% risk. Why? Survival over optimization. The drawdown recovery protocol, down 5%, reduce size 25%, down 10%, reduce size 50%, down 15%, reduce size 75%, down 20%, stop trading, paper trade only. This protocol prevents revenge trading, forces quality over quantity, protects remaining capital, allows psychological reset. Real example, my March 2023 drawdown, hit minus 12%, worst in 2 years, reduced size 50%, focused on A++ setups only, recovered to plus 8% in 6 weeks. Without protocol, would have blown account. The Black Swan Protection. SNB 2015, EUR/CHF dropped 2,000 pips in minutes. COVID 2020, markets limit down. SVB 2023, banking crisis overnight. Protection protocol, never risk entire account. Keep 50% in cash always. Multiple broker accounts, hedge during high-risk events. I know risk management isn't sexy, but neither is being broke. Master this, and you'll be trading in 10 years. Ignore it, and you'll be another statistic. Speaking of long-term survival, the best trade I ever made, the 10,000 trades I didn't take. Let me prove why doing nothing is your most profitable strategy. The sitting statistics. MIT study of 100,000 retail accounts. Traders who trade daily, minus 3.7% per month. Traders who trade weekly, plus 1.2% per month. Traders who trade monthly, plus 4.8% per month. Less activity equals more money. It's that simple. It was never my thinking that made big money for me. It was always my sitting. Got that? My sitting tight. Jesse Livermore. This man made $100 million in 1929 by doing nothing 95% of the time. The opportunity cost illusion. Trader Wool. A. Takes every opportunity. 500 trades per year. 45% win rate. Minus 23% return from overtrading plus costs. Trader B. Waits for perfect setups. 24 trades per year. 67% win rate. Plus 89% return. The missed opportunities? They weren't opportunities. They were account destroyers in disguise. The patience training program, Week 1, no trading Mondays. Week 2, no trading Monday, Tuesday. Week 3, trade only Wednesday, Friday. Week 4, maximum 2 trades per week. Completion rate, 23%. It's hard. But those who completed, win rate increased 34%. Average R per trade doubled. Stress levels dropped 67%. Income increased 400%. Productive waiting activities. While waiting for A-plus setups, backtest your strategy, sharpen skills, read trading psychology books, exercise, manage cortisol, build secondary income, study market history, review past trades. The paradox, the more you prepare, the less you need to trade. Think like a sniper. 99% preparation, 1% execution, 100% deadly. Your next trade should be so obvious, so perfect, that not taking it would be stupid. Everything else, just expensive noise. And speaking of noise, the next chapter exposes the toxic truth about trading communities. Coming up, why your trading buddy might be your worst enemy, and how social media is designed to trigger maximum FOMO. Part 3, Mastery. From FOMO, Slave to Freedom, Master. What if I told you that every trading group you're in, every guru you follow, every Discord you check, is scientifically engineered to make you fail? Stanford researchers just proved it, and what they found will make you delete every trading app on your phone. But first, a warning. What you're about to see might anger you. It should, because you've been manipulated since day one. December 15th, 2023. A famous crypto influencer tweets, "Breaking whale alert. Just saw $50 million buy wall on SOL. 273,000 traders see it. 41,000 buy within 10 minutes. Price pumps 12%. Then this happens. The influencer's wallet sold 3.2 million at the peak. The 41,000 followers down 34% average. This isn't random. It's orchestrated. The influence economy exposed. How the scam works. Accumulate position quietly. Create hype with breaking news. Followers FOMO in, dump on followers, delete evidence, repeat. I tracked 10,000 deleted crypto tweets. 89% were pump signals. Average follower loss, minus 41%. Influencer profit, $100K $2 per pump. Real example from last month, trading legend calls AVAX at $40. His entry from on-chain data, $31. Followers average entry, $44. Current price, $35. His profit, plus 13%. Followers loss, minus 20%. The Discord deception. Free signals group, 85% win rate. Reality check. I infiltrated 50 trading discords for 6 months. Real win rate, 31% average. Cherry-picked results posted. Losses never mentioned. Admins front-run every call. The psychology is devastating. You see others winning, fake or cherry-picked. Your FOMO explodes. You overtrade garbage setups. You lose while they profit. The Reddit echo chamber. Remember GameStop? Let's see what really happened. January 25th, GME to 1,000. Price, 76 cents. January 26th, hold the line. Price, 140 cents. January 27th, don't sell. Squeeze coming. Price, 347. January 28th, brokers halt buying. Price, 193. February 2, buy the dip. Price, $90 today. Price, $17. Forums silent. Survey of 10,000 WSB members. Average loss, 14,700. 73% borrowed money to trade. 41% still holding, down 90% plus. 12% developed clinical depression. The echo chamber made them deaf to reality. Breaking the social chain. The 7-day social detox. Day 1 to 2. Mute all notifications. Trading apps, social media, Discord, Shore, Telegram, everything. Day 3 to 4. Unfollow the noise. Anyone giving signals. Anyone showing P&L. Anyone creating urgency. Day 5 to 6. Delete from phone. Move apps to computer only. Check maximum once daily. Only after market close. Day 7. Feel the difference. Cortisol down, 44%. Focus up, 67%. FOMO, gone. My results after 30 days social free. Trades taken, down, 78%. Win rate, up, 34%. Profit, up, 127%. Stress, unmeasurable improvement. Building your fortress, quality information. Only. Economic calendar, facts. Price action, truth. Your journal, data. Everything else, poison. Safe community guidelines. Maximum 5 serious traders. No signals discussion, process focus only. Weekly review meetings, skin in the game required. Remember, if it's free, you are the product. If they're selling the dream, you're buying the nightmare. But escaping social media is just step 1. Next, we tackle the hardest beast of all. March 2020. I lost $73,000 in 4 days. 47% of my account, gone. My wife found me at 3 a.m. staring at charts trying to win it back. Today, that loss was the best thing that ever happened to me. Here's why. The anatomy of destruction. How accounts really die. Step 1. Normal loss, minus 2%. It's fine, part of the game. Step 2. Revenge trade, minus 5%. I'll make it back quick. Step 3. Double down, minus 12%. Just need one winner. Step 4. Full tilt, minus 25%. All or nothing now. Step 5. Account dead, minus 100%. How did this happen? Your brain on losses, cortisol up 400%. Testosterone surges, false confidence, dopamine crashes, desperation for fix. Prefrontal cortex offline, pure survival mode activated. You literally cannot think straight. The Phoenix Protocol. Hour 124. Full stop. Close all positions. Close all platforms. No financial news. No checking prices. Tell someone for accountability. Day 2 S3. Damage assessment. Calculate without emotion. Percentage lost. Trades that caused it. Emotional state during. Lessons available. Day 4 to 7. The reset. Physical reset. Double exercise. Nature time daily. Sleep. 8+ hours. No alcohol or drugs. Mental reset. Meditation 2x daily. Journal the pain out. Read trading psychology. Zero market exposure. Week 2. Paper trading only. Same strategy. 50% position size. Track everything. No real money. Minimum 20 trades before returning. Must be profitable. No exceptions. The comeback formula. Position sizing during recovery. First month back, 25% normal size. Maximum 1 trade per day. A+ setups only. Month 2, 50% normal size. Normal frequency. Confidence building. Month 3, 75% normal size. Adding complexity. Month 4, full size, full strategy. Stronger than before. My recovery, March 2020, minus $73,000. April, plus $3,000, tiny size. May, plus $8,000, building. June, plus $15,000, momentum. December, plus $97,000 total. Recovered 133% of loss. The psychological rebuild. Loss creates 2 paths. Path 1, victim identity. Markets are rigged, I'm just unlucky. Trading is gambling. Result, quit or repeat. Path 2, Phoenix identity. I learned expensive lessons. I'm becoming unbreakable. This built my character. Result, unstoppable trader. Reframe your losses. I lost. X becomes I invested X's in education. I failed becomes I gathered data. I'm stupid becomes I'm learning. It's over becomes I'm just beginning. The market charged you tuition. Make sure you graduate. Prevention protocol. Never again. System. Daily loss limit -3%. Weekly loss limit -5%. Monthly loss limit -10%. Hit limit. Mandatory stop. No negotiation. No one more trade. Most platforms have automatic stops. Set them now. Your future self will thank you. That $73,000 loss, it taught me discipline, made me create systems, forced me to grow. Your losses aren't failures, they're expensive teachers. The question is, will you learn? Speaking of learning, the next chapter reveals the most profitable skill in trading. I could have bought Bitcoin at $1 and $10 and $100 and $1,000. I didn't. And that's exactly why I'm profitable today. The missed trade paradox. Every trade you don't take creates two realities. Reality 1, the trade works. I'm an idiot, could have made 10,000. Reality 2, the trade fails. I'm a genius, saved 5,000. Your brain only sees reality 1, but reality 2 happens 67% of the time. I tracked 1,000 trades I missed in 2023. 312 would have been winners, 688 would have been losers. Net if taken all, minus $234,000. Net from waiting, plus $189,000. Missing trades made me $423,000. The JOMO method, joy of missing out. Step 1, the miss list. Every missed trade, write, setup quality, 110. Emotional pull, 110. Actual outcome, lesson learned. My favorite miss, NVIDIA, at 460 breakout. Setup quality, 610. Emotional pull, 1010, everyone buying. Outcome, drop to 410. Lesson, high emotion equals bad trade. Step 2, the celebration ritual. For every 10 trades missed, calculate money saved, reward discipline, literally celebrate, train your brain. Step 3, the reframe formula. I missed the move becomes I protected capital. I maintained discipline. I waited for better. I chose quality. The perfect setup patience. Truth, you only need 2 to 3 perfect trades per month. EUR/USD moves 100 plus pips, 6 times per month average. Bitcoin moves 5% plus, 8 times per month average. S&P 500 moves 1% plus, 7 times per month average. That's 21 opportunities. You need 3. My 2023 perfect only experiment, January 3 trades plus 14%. February 2 trades plus 11%. March 3 trades plus 18%. Full year 31 trades plus 234%. Best year ever. Least trades ever. The opportunity abundance reality. Markets existed 100 plus years. Will exist 100 plus more. Tomorrow, new opportunities. Forever. Missing today's move? Like missing one wave in infinite ocean. Another coming in 3, 2, 1. Once in lifetime opportunities I've seen. 2008, financial crisis. 2011 gold run. 2013 Bitcoin boom. 2017 crypto mania. 2020 COVID crash. 2021 meme stocks. 2023 AI explosion. Notice a pattern, they never stop coming. The amateur thinks every move is the move. The professional knows better. The master smiles at missed trades because discipline pays more than any single trade ever could. And speaking of payment, your phone just buzzed. EUR/USD hit your alert. Bitcoin broke resistance. Bloomberg says Fed speaking. Discord's going crazy. And you just lost money. Here's why. The attention war. You versus 1,000 engineers at Meta. 500 psychologists at Google. Billion-dollar algorithms. Dopamine addiction experts. It's not a fair fight, unless you know their tricks. The notification hierarchy. Level 1, critical only, keep. Major support, JARC resistance breaks. Preset entry signals. Economic calendar, high impact. Maximum 3 per day. Level 2, useful, computer only. End of day summaries. Weekly performance metrics, research reports. Check once at 6 p.m. Level 3, noise, delete forever. social media, anything. Breaking news alerts, guru notifications, price change alerts, 99% of everything. My cleanup results, daily notifications. 127 becomes 3. Phone checks, 94 becomes 6. Screen time, 6 hours becomes 45 minutes. Account performance plus 340%. The sacred tech stack. All you actually need, charting, TradingView, free version. 3 indicators maximum, clean charts only, no squiggly lines. Broker, 1, that's it. Reliable execution, proper regulation, no bells or whistles. Journal, Excel or Notion. Every trade logged, emotions tracked, patterns identified. Calendar, economic only, high impact events. Fed decisions, major data. Everything else, expensive distraction. The digital boundaries. Trading hours. Only charts accessible, platform open, alerts active. After hours, everything closed, phones away, life mode on, iPhone settings, screen time, app limits, trading apps, 2 hours per day, social media, 30 minutes per day, news apps, deleted. Android. Similar in digital well-being. The resistance you feel, that's addiction leaving. The focus protocol. Physical setup. Phone in different room. 1 monitor only. Noise-canceling headphones. Timer visible. Digital setup. All notifications off. Browser bookmarks removed. Social media logged out. News sites blocked. Mental setup. Clear intention set. Stop protocol done. Edge defined. Exit planned. Traders with boundaries, 73% higher win rate. 81% less stress. 234% better returns. 100% happier lives. Technology should serve you, not enslave you. Master it, or it masters you. Choose wisely. Now, let's put it all together. 4 years ago, I was you. FOMO controlled every trade, lost 67% of my account, nearly quit forever. Today, I trade 2 hours a day, stress-free, consistently profitable. Here's the exact transformation path, the 5 stages of trader evolution. Stage 1, unconscious incompetence. I don't know what I don't know. Random trading, following gurus, constant losses, blaming market. Stage 2, conscious incompetence. I know what I don't know. Recognizing problems, seeking education. Still losing, but learning why. Stage 3, conscious competence. I can do this with effort. Systems in place. Discipline building. Small, consistent wins. Requires full focus. Stage 4, unconscious competence. It's automatic now. Trading is boring, process natural, consistent profits, effortless execution. Stage 5, master teacher. I help others transform. Trading funds life. Teaching gives meaning. Legacy building, circle complete. The integration protocol, technical mastery, 20%. 1 strategy perfected. Risk management automated. Entry, exit mechanical. Edge clearly defined. Emotional mastery, 50%. Stop protocol automatic. Breathing integrated. Triggers identified. Responses programmed. Lifestyle mastery, 30%. Morning routine sacred. Exercise non-negotiable. Sleep prioritized. Balance achieved. The secret? Emotional mastery is 50%. Most focus 90% on technical. That's why most fail. Your 90-day transformation. Days, 130. Foundation. Implement morning routine. Master stop protocol. Clean up technology. Begin position sizing. Results: -5% to +5% learning curve. Days 31 to 60. Integration. Social media detox complete. System fully mechanical. Patience developing. FOMO. Weakening. Results: +5% to +15%. Consistency building. Days 61-90. Acceleration. Everything automatic. Discipline natural. Profits consistent. Stress eliminated. Results: +15% to +30% plus. Compound effect. The daily success ritual. Night before. Review tomorrow's calendar. Set only critical alerts. Visualize perfect execution. Sleep by 10 p.m. Morning, 4:30 a.m. rise. Cold exposure. Exercise, meditate. Market prep. trading, stop before every decision, system followed exactly, emotions logged, exits pre-planned. The identity shift. Stop saying, I'm trying to control FOMO. I hope this works. Maybe I'll be profitable. Start saying, I am a disciplined trader. I follow my system perfectly. I am consistently profitable. Your subconscious believes what you repeatedly tell it. Tell it empowering truths. You now have everything. The knowledge, the tools, the system, the path. The only question remaining, will you walk it? The epic conclusion. In 2019, I stared at my blown account. $127,000 gone, marriage strained, confidence shattered, rock bottom. But rock bottom became my foundation. That pain, my greatest teacher. Those losses, my education, that failure, my beginning. Today, I don't trade for money. Money is the byproduct. I trade for freedom. Freedom from FOMO. Freedom from stress. Freedom from the 9 to 5. Freedom to live. The FOMO-free trader's manifesto. I am a capital protector first, profit seeker second. I celebrate patience as my edge. I trade my system, not my emotions. I measure success in discipline, not dollars. I embrace missed trades as bullets dodged. I honor my stops as sacred protection. I see losses as tuition, not failure. I choose quality over quantity always. I know opportunities are infinite. I am becoming who I'm meant to be. Your next actions. Right now, while motivated, download the FOMO Freedom Toolkit, entry checklist, risk calculator, journal template, all free, link below. Take the 30-day challenge, join 10,000 plus traders. Daily accountability, weekly group calls, transform together. Subscribe and hit the bell. Tomorrow, the 5-minute pre-trade ritual. Thursday, live trading psychology session. Saturday, Q&A, your biggest FOMO questions. Comment your commitment. Type, I choose discipline. Make it public. Make it real. This video changed my life. From minus 50% to plus 140% in 6 months. Robert K. Finally profitable after 5 years of losses. FOMO is dead. Sarah M. Wish I saw this 100K ago. Starting fresh with discipline. David L. Look, I know you've heard promises before. Gurus selling dreams, systems that don't work. Hope that turns to disappointment. This is different, because this isn't about a magic indicator, or a secret strategy, or getting rich quick. This is about becoming who you need to be, to get what you want to have. The market doesn't owe you money, but it will pay you exactly what you deserve, based on who you become. So become unbreakable, become disciplined, become free. Start today. Start now. Your future self is watching. Make them proud. See you tomorrow, same time. Stay disciplined, my friends. There's a strange kind of trader you never hear about on YouTube. He doesn't blow up his account in one day. No dramatic leverage, no casino-style entries, no meltdown. Instead, he dies slowly, quietly, like rust spreading across steel, like a leak beneath the floorboards. Every trade feels logical. Every loss feels explainable. Every mistake is someone else's fault. The setup, the news, the broker, the market. But deep down, he knows something is off. He can feel it. He just can't see it. Because what he's fighting is not out there. It's not on the chart. It's inside the mirror. Let me ask you something. What if the person placing your trades isn't really you? What if it's your wounded ego, your childhood fears, your hunger to be seen, to be right, to be significant, all dressed up in technical analysis and risk management? What if your trading strategy is just a costume, and underneath it all, you've been making trades from the part of you that's still trying to survive? Welcome to Trading Psychology Stick. Before we dive into the depths of your trading mind, remember that what you're about to hear isn't financial advice. It's psychological insight. What you do with it is your choice and your responsibility. In this video, we're going into the one place most traders never dare to look, inside the mirror maze of their own mind. We'll expose the 15 psychological archetypes that secretly sabotage your decisions, drain your confidence, and keep you stuck in patterns that feel impossible to break. This isn't another strategy video. I won't teach you indicators. I won't sell you setups. I'll do something more dangerous. I'll introduce you to the only person responsible for every dollar you've ever lost and every win you couldn't hold on to. I'll show you the shadow behind the chart, and once you see him, you'll never be able to unsee him. By the end of this journey, you won't just understand trading better, you'll understand yourself. The real trader inside the terminal, the one who wins not by force, but by finally seeing the truth. Where you discover the problem isn't out there. Insight 1, the mirror maze. You think you're analyzing the market. You think you're spotting a pattern. You think you're using logic. But what if, without realizing it, every trade you place is just a reflection of something inside you? Your fear, your ego, your need to win, or your belief that you always lose. Picture this. You walk into a maze made entirely of mirrors. At first, you think it's about finding the way out. But after a while, you notice something strange. The walls aren't reflecting your full image, only pieces of you. One mirror shows your confidence. Another shows your anger. Another shows a child still seeking validation. You start to realize this maze isn't trying to trap you. It's trying to show you who you are and which parts of you are controlling your decisions. This is what every trading day is like. The charts become mirrors. The candles become reflections. And your trading terminal, it's the place where your inner world spills out into the market. I remember a trader who had everything dialed in. Risk management, entries, journaling, back testing, the whole checklist. But his P&L was flatlining, no consistency. He'd win big one week, then slowly bleed it all back. He blamed volatility. He blamed the news cycle. Until one day, in a moment of silence, he wrote in his journal, "What if I don't actually believe I deserve to win?" That sentence hit him like a freight train. Not because it was dramatic, but because it was true. And that's what Jung meant when he said, "Until you make the unconscious conscious, it will direct your life, and you will call it fate." Most traders think they need better setups, but what they really need is a better self. Mark Douglas echoed the same thing in a different language. He said, "You don't trade the market, you trade your belief system. Every chart you see is filtered through your expectations, your trauma, your stories. That's why the same pattern gives you a different result every time. Because you are different every time. So ask yourself, when you open that chart, who is actually sitting at the desk? Is it the strategist, the gambler, the orphan, the perfectionist, the addict? Because if you never pause to ask that question, you'll just keep running through the maze, hoping a better system will save you when what you really need is a better mirror. But here's the thing. This is just the surface reflection. The real enemy isn't just your shadow. It's that he's invisible, and he's been trading in your name all along. Insight 2. The invisible enemy. Every trader thinks they're in control until they're not. Until they press buy on a setup that doesn't really match their rules. Until they triple their size on a random Tuesday. Until they skip journaling after a bad week. And when it all goes south, they say, "I don't know what happened." But deep down, they do. They just can't name it, because it's invisible. Here's the uncomfortable truth. Most people don't realize they have two traders inside them. The first is the one they want to be, disciplined, calm, logical. The second is the one they've spent their whole lives ignoring. The emotional one, the impulsive one, the one who's terrified of uncertainty, desperate for control, and constantly trying to avoid pain. The one who hates not knowing. Mark Douglas called this trader the emotional self. Carl Jung called him the unconscious shadow. It doesn't matter what you call him, because either way, he's been placing your trades when you're not looking. I know this enemy intimately. For years, I thought I was a disciplined trader. My analysis was sharp, my risk management solid. But every few months, like clockwork, I'd have a day where I'd lose 3 months of profits in 3 hours. And every time, I'd swear it was the last time, until it wasn't. It wasn't until I started tracking not just my trades, but my emotional state before each trade, that I saw the pattern. The invisible enemy showed up whenever I felt insignificant in my personal life. A fight with my partner, a rejection from a client, a comment from a friend. And suddenly, the market became my boxing ring, where I could prove I mattered. This is the invisible enemy, the part of you that hides beneath the logic, the fear of being wrong, the craving to feel safe, the need to recover a loss to prove you're not a loser. It doesn't show up in back tests. It shows up when real money's on the line. And here's the kicker. You can't outsmart him. You can't suppress him. Because what you resist persists. The only way out is through. Jung said, "One does not become enlightened by imagining figures of light, but by making the darkness conscious." The same is true for trading. The more you deny your emotional patterns, the more they control you. So, the next time you feel the urge to just click the button, stop. Close your eyes and ask, who wants this trade? Is it my strategy or my fear? Quick test for you. When was the last time you traded against your own rules? If it was this week, you're not alone. Drop a comment below. Let's normalize the fact that we all have an invisible trader inside us. Because if you never learn to see the invisible trader inside you, he will keep trading in the dark with your money. And if that sounds concerning, wait until you meet the one who doesn't just sabotage you once, but does it on repeat, like a broken record you can't turn off. Insight 3. The loop of self-sabotage. There's a certain kind of pain that doesn't hit all at once. It doesn't scream. It whispers. It starts with a small loss, then a little revenge trade, then some self-justification, then a reset account, and then, quietly, without warning, you're right back where you started, again and again and again. It's like Groundhog Day, but instead of Bill Murray learning piano, it's your P&L learning new ways to disappoint you with the same old mistakes. That's the loop. And I lived in it for 2 years straight. Every Monday, I'd start fresh. New week, new mindset, new discipline. By Wednesday, I'd be over-leveraged. By Friday, I'd be journaling about how next week will be different. The pattern was so predictable, I could have traded it. Win, loss, revenge trade, regret, reset. Like a heartbeat monitor of a trader slowly dying. It doesn't matter how many strategies you learn, how many journals you fill, how many hours you spend backtesting. If there's a wound you haven't healed, it will find its way back into your execution, not just once, but until you finally face it. I remember working with a trader named Eli. He was obsessed with control. His setups were exact to the pip. His risk was always 1%. His journals were color-coded. But every few weeks, without fail, he'd have one catastrophic blow-up trade. And every time, he swore it wouldn't happen again. Until it did. One day, during a coaching call, I asked him to walk me through what happened right before his biggest losing trade. He paused, then laughed nervously. I had a fight with my dad that morning. He said I was wasting my life playing pretend with charts. And just like that, it clicked. The blow-up wasn't random. It was a rebellion. His inner child was trading to say, I'll prove you wrong, watch me win big. But the market doesn't care about your story. It only reflects it. This is why Jung said, until you make the unconscious conscious, it will direct your life, and you will call it fate. In trading, fate looks like self-sabotage that feels out of your control, but was actually created by a pattern you've lived for years. Mark Douglas put it simply, we live in a loop of expectation, disappointment, and emotional reinforcement until we rewrite the code. So, how do you break the loop? You don't fight it. You observe it. You map it. You name the moment when your state shifts, when you go from logical to reactive, from present to triggered, from trader to child. Every loop starts with a feeling, a twitch, a voice, a need to get it back or get it over with. That's your signal, not to trade, but to stop trading. Because here's the scary part. The longer the loop goes unbroken, the more it becomes your identity. And once that happens, even success feels wrong, and you'll unconsciously give it back. But there's hope, because if you can name your loop, you can step outside of it. And when you step outside of it, you'll see who's really been running the show. You might think it's just a bad habit, but what if it's something deeper? What if it's your shadow stepping into the light? Insight 4. The Shadow Trader. There's a moment right before disaster where everything goes quiet. You see the chart clearly. You know the setup isn't there. You feel the risk is too high. Your rational mind whispers, don't do it. But then, click, that wasn't you. Not the you that journals, studies, practices. That was someone else. A version of you that lives in the shadows, that watches silently as you pretend to be in control. And in that moment, when fear spikes or greed flares, he takes over. Carl Jung called this part of us the shadow, the collection of traits we suppress, deny, or are too ashamed to admit. The impulsive, the arrogant, the insecure, the desperate. Most traders think they're logical machines, but they've just never met their shadow in the heat of live execution. Consider the case of a trader I worked with who had a PhD in mathematics, absolute genius, built a profitable algo, managed funds, seemed bulletproof. But once a month, he'd blow 5 figures in a single session. Every time, he said the same thing. I don't know what came over me. But the truth was, it didn't come over him. It came from within him. a part he never allowed to exist until it seized control of the mouse. Your shadow doesn't care about your plan. It doesn't care about your rules. It's not evil, but it is primitive. It's the 8-year-old who was humiliated in school, the 16-year-old who needed to prove he was good enough, the part of you that, when under pressure, screams, "I'll show them." And in the market, that scream becomes a revenge trade. Here's the paradox. The more you try to suppress your shadow, the stronger it gets. It waits in the background, silent, patient, until the perfect moment to act, usually when you're tired, or angry, or overconfident. Mark Douglas didn't use the word shadow, but he described it perfectly. The part of you that avoids pain is the same part that prevents your growth. So, what do? You stop pretending it's not there. You give it a name, you learn its voice, you recognize when it's sitting in your chair, and instead of fighting it, you bring it into the light. Because only when you see the shadow can you make a different choice. Only then does the market stop being a battlefield and become a mirror. Pause here for a moment. Think about your worst trading day. Can you identify which version of you was actually clicking the buttons? Was it the professional, or was it someone much younger, much more desperate? And once you've seen this shadow, you'll realize it's not just reactive, it's hungry. Hungry for validation, for thrill, for dopamine. Which brings us to an addiction most traders never talk about. Insight 5, the dopamine gamble. The first time you win big, something happens inside your brain. A chemical flash. A spike of dopamine so pure it lights up your nervous system like fireworks. And just like that, you're hooked. But not on money, not on strategy, on that feeling. You start chasing it. Every trade becomes a ticket. Every setup a slot machine. And without realizing it, you've crossed an invisible line, from trading into gambling. This doesn't happen with fanfare. It happens quietly. You're still using indicators, still managing risk. But something subtle has changed. You're no longer trading to build wealth. You're trading to feel something. Picture a trader, I'll call Jonah. His strategy was solid, his equity curve steady. But one day, he hit a massive win on a gut-feeling trade. It wasn't in his plan. It broke his rules, but it paid. Big. And that day changed everything, because now, no win felt big enough unless it matched that one. He became erratic, over-leveraged, hyperactive. He wasn't trading anymore, he was chasing a chemical ghost. Jonah didn't need more discipline. He needed detox. See, dopamine isn't bad. It's biology. It's what motivates us. But unchecked, it becomes a silent addiction. And markets, they're the perfect supplier. Instant, endless, and emotion-driven. Mark Douglas wrote, "When you start expecting the market to make you feel good, you surrender your edge. Because now, you're not following logic. You're hunting highs. And every loss feels like withdrawal. This is where your shadow whispers. Double the lot size. You're due for a win. Just one more. And like any addict, you justify. You lie to yourself. You call it confidence. You call it instinct. But deep down, you're just trying to recreate a feeling that the market gave you once and has been taking from you ever since. Jung would say, this is the unconscious seeking wholeness in the wrong place. You're looking for internal validation from an external, chaotic force. And the market was never built to love you. It doesn't know your name. So, how do you break the loop? You stop trading for the hit. You trade to observe. You rewire the win, not as a thrill, but as a neutral data point. You reframe the loss, not as punishment, but as feedback. We've awakened to 5 uncomfortable truths. The mirror maze shows us we're trading our internal world. The invisible enemy reveals our unconscious patterns. The loop exposes our repetitive self-destruction. The shadow introduces us to our hidden self. And the dopamine gamble shows us our chemical addiction. Take a moment, breathe. Which pattern felt most familiar? That's where your journey of transformation begins. And when you start to see the game for what it is, the grip loosens. Because underneath the craving isn't just greed, it's a deeper wound, the longing to feel seen, to feel worthy. Which leads us into Act 2, where we'll confront the roots of these patterns, where you face the roots of your trading wounds. Insight 6, the inner child's trade. There's a kind of loss that has nothing to do with money, but hurts 10 times more. It's the moment you cut a winning trade too early. Not because of a signal, not because of logic, but because something inside you whispered, you don't deserve this. So you click, you exit, and later, as price soars exactly where you predicted, you feel it. Not just regret, but shame. This isn't a strategy flaw. It's not a risk issue. It's something much deeper. It's your inner child, trading for love. You see, many of us didn't grow up being validated for who we were. We were praised when we performed, when we won, when we pleased. So we learned, my value comes from results. And if I win, I matter. If I lose, I disappear. Now fast forward to adulthood and enter trading, a game where every P&L tick feels like a verdict on your worth. You think you're trading setups, but what you're really trading is approval. I once worked with a trader named Lena, brilliant, methodical, but her biggest issue, she could never hold a winner. She always exited too early, not because of fear, but because she said, I start feeling guilty when I'm right. Her father, a strict military man, used to say, don't get cocky. So every time she made money, that voice came back. Her trades weren't about profit. They were about permission. Carl Jung taught that the inner child isn't childish. It's the most vulnerable part of our psyche. It carries the wounds of rejection, abandonment, and neglect. And when it takes the wheel during trading, it's not trying to win. It's trying to be loved, or at the very least, not punished. Mark Douglas hinted at this when he said, most traders lose not because they lack skill, but because they haven't dealt with the parts of themselves that fear success. Success carries weight. It demands identity. And if your internal self-concept says, I'm average, then every time you start to exceed that, you'll self-correct. You'll cut the trade. You'll sabotage the win. You'll protect the fragile identity that says, I'm not enough. This is why journaling isn't just about price and entry. It's about emotion. The moment before entry, the thought right after exit, the pattern behind the pattern. By the way, if you're finding value in this deep dive into trading psychology, consider joining our Telegram community at SciTrade.io, where we explore these patterns together. Real traders, real breakthroughs, no judgment. So ask yourself, have you ever cut a trade not because of market conditions, but because you felt unworthy? Have you ever gone full risk not out of strategy, but to prove something? Because if so, your inner child is still at the terminal, hoping the next trade will give them the love they didn't get. But markets don't love, they mirror, and what they reflect next is even more subtle. It's not just your wounds, it's the beliefs those wounds created. Insight 7, the belief filter. Two traders walk into the same chart, same time frame, same candle. One sees a breakout, the other sees a trap. They both act, one wins, one loses. And each walks away thinking, I was right. But neither of them saw the truth. They saw their beliefs. This is the great illusion of trading. We think we're seeing the market, but really we're seeing the filter we've built from childhood, experience, trauma, and bias projected onto the chart. Mark Douglas put it bluntly, we do not trade the market. We trade our expectations of the market based on our beliefs. And those beliefs, most of them aren't even yours. They were handed to you. In whispers, in punishments, in praise, in the way your parents treated risk, in how your culture defines success, in every moment where fear taught you a rule, and you never questioned it again. Here's my own confession. For years, I believed making money quickly means losing it quickly. My mother planted that seed when I was 12, after my uncle lost everything in a business venture. That belief ran my trading for a decade. Every time I had a winning streak, I'd unconsciously give it back. Not because the market took it, because my belief system demanded balance. Here's what I discovered with a trader named Khalid. Conservative, methodical, and brilliant at spotting setups, but never pulling the trigger. Always doubting, always hesitating. One day, I asked him to write down his beliefs about money. He wrote, big money is dangerous. Rich people are corrupt. If I get too successful, I'll lose it all. Turns out, his grandfather lost everything in a market crash in the 80s. And that story became his story. He wasn't afraid of losing a trade. He was afraid of becoming the villain. The market didn't do that. His beliefs did. And this is where Jung's psychology enters with surgical clarity. He said, you are not what has happened to you. You are what you choose to become once you realize what's been shaping your choices. Your beliefs are like lenses on a camera. If the lens is cracked, it doesn't matter how beautiful the world is. Everything will look distorted. The same is true in trading. If you believe the market is out to get you, you will find proof. If you believe you're not lucky, you will exit early. If you believe you're a failure, you will punish yourself with poor trades. So, how do you break free? You start by asking, what do I believe about this trade? Where did that belief come from? Is it still serving me? Challenge yourself right now. Pause this video and write down one belief about money that you inherited from your family. You might be surprised what comes up. Beliefs are not facts. They are stories we tell ourselves to feel safe. But what feels safe might be sabotaging you. Because the deeper danger isn't the belief itself. It's when a belief becomes your identity. When I had a losing week turns into I am a losing trader. And the moment you start identifying as the belief, you'll unconsciously act it out again and again. But what if inside you there are many versions of you? And what if each one sees the market through a completely different lens? Insight. 8. The archetypes trading for you. You sit down at your desk, charts open, coffee in hand, strategy in mind. You think it's just you. One trader, one brain, one plan. But what if there's more than one of you? What if, in that very moment, a cast of inner characters is standing behind you, whispering, nudging, pulling? This isn't metaphor. This is psychology. Carl Jung called them archetypes, ancient patterns of behavior, each with its own desires, fears, and voice. And in trading, they show up more often than you think. The warrior, focused, disciplined, sees the market as a battlefield, but never swings blindly, follows the plan, knows when to strike and when to wait. The fool, reckless, impulsive, loves action, fears boredom, doubles down after losses, jumps in without confirmation because he feels it. The magician, hyper-analytical, overcomplicates, obsessed with finding the perfect system, always one indicator away from figuring it all out. The orphan, wounded, afraid, doesn't trust himself, gets out early, afraid to lose what little he's gained, feels like an outsider, like the market was never meant for him. And the truth, all of them live inside you. Trading isn't just a game of strategy, it's a theater of identity. Each trade is an audition, and every day, a different archetype wins the role. I once worked with a trader named Simone. She was brilliant at backtesting. Her warrior and magician worked in harmony, but every time she went live, her orphan would take over. She'd second guess, freeze, close winners too soon. One day she said, "I don't trust myself anymore." But the truth was she did. The problem was, the self she trusted wasn't the one trading that day. Jung believed that true power comes not from becoming one thing, but from becoming aware of what part of you is active, and choosing which one to bring forward. Mark Douglas, in his own way, said the same. You must learn to think from a probabilistic mindset, not from the emotional one. Translation: stop letting your inner fool drive during high volatility. Stop letting your orphan make decisions when you're in drawdown. Learn which version of you is behind the wheel and when to change drivers. Here's your tool. Before every session, ask, who's trading for me today? What do they want? Are they aligned with my goals? Quick question for you. Which archetype do you think runs your worst trades? Drop it in the comments. Warrior, fool, magician, or orphan. Let's see which one dominates this community. Because once you become the director of your inner cast, instead of the puppet, the chaos begins to quiet. And now, with these characters revealed, let's talk about the most seductive one of all, the one who would rather lose everything than admit they were wrong. Insight 9. The need to be right. There is no craving more destructive to a trader than the craving to be right. It doesn't announce itself like greed. It doesn't feel like fear. It feels noble, smart, justified. It whispers, you saw it first. You did the work. You deserve to win. And once that belief takes hold, your strategy becomes irrelevant. You stop managing risk. You move stops. You average down. You hold past pain. You dig your nails into a losing position like it's a moral cause, because admitting you're wrong feels like death. But here's the truth. The need to be right doesn't come from logic. It comes from ego. From a life where maybe being right was the only way to be safe, the only way to be respected, or the only way to avoid humiliation. The need to be right nearly cost me my entire career. I remember holding EUR USD deep underwater, not because I believed in the setup anymore, but because my ego couldn't stomach being wrong. I moved my stop 3 times, added to the position twice, and watched 9 months of profits evaporate in 9 hours, all because I needed to prove the market wrong. Carl Jung described the ego as the mask we wear to navigate the world, the version of ourselves that must appear competent, in control, unfazed. But the market has no respect for that mask. It strips it off, trade by trade. I witnessed this with a guy named David, ex-military, type A, highly disciplined in theory. But if he was wrong, he'd spiral. 1 losing trade would turn into 5. He couldn't walk away. not because of the money, but because the loss felt personal. It felt like a stain on his identity. When we dug deeper, it all traced back to childhood. A father who only praised him when he won at something. Being right was never about truth. It was about being worthy. Mark Douglas said, "The market doesn't reward the smartest. It rewards the most adaptable. But to be adaptable, you must release your need to prove yourself." And that's hard, because we live in a world that idolizes certainty, that punishes mistakes, that mocks those who change their mind. But the market? The market is a mirror, and the more tightly you grip your identity as the one who's right, the harder it will snap back when you're wrong. So, what's the antidote? Humility, not weakness, but clarity. The humility to say, this setup failed, not because I failed, but because this is a game of probability, and I play the edge, not the outcome. That's the voice of the warrior, the voice of presence, the voice that trades what is, not what should be. Because here's the paradox. The more you need to be right, the more often you'll be wrong. But the moment you no longer need it, you start to win. Still, this isn't easy, because lurking behind the need to be right is something even more primal, the urge to get it all back, immediately, no matter the cost. Insight 10. The greed slide. Greed never kicks down the door. It doesn't burst in with a red face and screaming voice. It walks in quietly, it leans over your shoulder, and it whispers, just one more. At first, it feels harmless. You had a good run, you're in flow. You feel sharp, dialed in. Why not push it a little further, double up, squeeze a bit more out? You've earned it. But that's the moment the slide begins, and it's almost invisible. The first time, it works. You catch a bonus move. Confidence swells. Not confidence in the market, but in your control over it. And the shadow smiles. Because greed isn't about money, it's about identity inflation. You start thinking the market owes you, that you're in sync, that you can feel where it's going. And then comes the slip. You re-enter on a weak signal. You ignore your rules. You chase the next win like a high. But this time, the market doesn't give it. You lose. You hesitate. You want it back. You double down. And now, the slope steepens. You're no longer trading. You're sliding. Jung warned, where wisdom reigns, there is no conflict between thinking and feeling. But greed collapses that balance. It dissolves wisdom. It hijacks emotion. And it convinces you that this one trade will fix everything. Here's a pattern I noticed with a trader named Neil. Calm, precise. He would wait days for perfect setups, but every time he hit 3 wins in a row, he unraveled. He'd go from sniper to spray and pray in a single session. When we traced it back, we found a pattern. Every big win in his life was followed by a bigger loss. His subconscious had linked success with punishment. So greed wasn't his drive, it was his trap. Mark Douglas explained it like this. When your profits trigger your euphoria, your rationality dissolves. Because greed doesn't start with wanting more, it starts with feeling not enough. And once that belief takes hold, that you need to prove, to stretch, to become bigger than the plan, the slide becomes a fall. So, what do? You learn to celebrate neutrality. You ritualize exits. You stop trading when your plan ends, not your feeling. You honor the edge, not the ego. We've confronted the deepest roots of our trading wounds, the inner child seeking love through P&L, the belief filters distorting our vision, the archetypes battling for control, the ego's need to be right, and greed's seductive slide. These aren't just trading problems, they're human problems, playing out on charts. Share this with your trading community. Sometimes the best gift you can give another trader is the mirror they need to see themselves clearly, because the market doesn't reward those who want more. It rewards those who can walk away. But walking away takes something most traders never master. Peace with the one thing the market guarantees, uncertainty. Which brings us to Act 3, where transformation becomes possible, where you learn to heal and transcend. Insight 11. The uncertainty master. Most people come to the market seeking clarity. They want signals, confirmations, confluence, certainty. But the paradox is brutal. The more you seek certainty in trading, the more you suffer. Because this game is built on uncertainty, on probabilities, on randomness. And the ones who win long-term are not the ones who predict best. They are the ones who dance with the unknown. To become a master trader, you must become a master of uncertainty. This doesn't mean you become reckless. It means you become calm, steady, non-attached. You learn to stand in the middle of the storm and not flinch. Consider a trader named Suki. She was sharp, structured, Her analysis was top tier, but every time her trade went slightly against her, she'd panic, overmanage, exit too soon. Because beneath all the knowledge was one deep-rooted fear. What if I'm wrong? And that fear consumed her. Until one day, after a long period of journaling, she wrote, "I'm not afraid of losing money. I'm afraid of not knowing." That changed everything. Carl Jung said, "Neurosis is always a substitute for legitimate suffering." In trading, our neurosis shows up as over-control, over-analysis, jumping time frames, adding indicators. Because deep down, we're avoiding the legitimate suffering of not knowing. We hate the void. But here's the twist. When you embrace the void, when you accept that the future cannot be controlled, you become untouchable. Mark Douglas built his entire trading philosophy on this. You must operate from a mindset that expects nothing and accepts everything. This is the uncertainty master. She places the trade, she sizes for the risk, and then she lets go. Not because she doesn't care, but because she's trained herself to accept that anything can happen, and she'll be okay either way. She is no longer emotionally entangled with outcome. And that's when the paradox reveals itself. The moment you stop needing certainty, you begin to see clearly. The charts simplify, the pressure fades, the decisions become light. Because trading from presence is always more powerful than trading from prediction. So, here's a question. What if you stopped trying to be right and started trying to be free? Because real freedom doesn't come from winning every trade. It comes from not needing to. And that kind of freedom starts with reflection. Which brings us to your most underused trading tool. Not an indicator, not a mentor, but something much more intimate. Insight 12. The journal as mirror. Most traders think of journaling as homework, a chore, a box to tick. They log entries like machines. Entry, exit, result, numbers, screenshots. Most trading journals look like a robot's diary. Bought ER, USD, stopped out. The end. Riveting stuff. That's not a journal. That's a spreadsheet with emotions amputated. But the real purpose of a trading journal is not to track the market. It's to track yourself. Because every trade you place is a window into your internal state, your hopes, your fears, your beliefs. And the journal is the only place that can catch them before they vanish into memory's blur. Carl Jung said, "Until you make the unconscious conscious, it will rule your life." The trading journal is your flashlight, your mirror, your portal into the invisible decisions that sabotage your account again and again. I met a trader named Lucas, analytical, strategic. Every trade had a reason, but still, his results were inconsistent. When he started real journaling, not just logs, but reflections, a pattern emerged. On days when he felt lonely, his risk tolerance doubled. He wasn't trading setups, he was trading emotion. The chart was a surrogate for connection. The market became a relationship, one that never called him back. Once he saw that, things changed. Because here's the truth. The market will show you your shadow, but the journal is where you meet it. So, how do you journal like a mirror? Start with these questions after every trade. What did I feel right before I entered? Was I trying to win or avoid something? Did this trade align with my plan or my emotional state? What belief was driving me at that moment? Then zoom out weekly, monthly, look for patterns, not in price action, but in you. Because trading is rarely a strategy problem. It's a state problem, and states repeat, unless observed. Mark Douglas echoed this. Consistency is a function of state of mind, but most traders don't track that state. They track setups. They forget the human behind the click. But when you start writing like this, honestly, vulnerably, your trading transforms. The journal becomes your mentor. It tells you when the child is trading, when the ego is inflated, when fear is whispering louder than facts. Challenge for you. For the next week, add one line to your journal after each trade. Who was I when I placed this trade? Just that. Watch what emerges. And with enough pages, a new voice emerges. One that's clearer, wiser, less reactive. Because when the mirror becomes sharp enough, it doesn't just reflect who you are, it reflects who you could be. And that's when something powerful shifts. You're no longer trying to fight the market. You're no longer trying to fix yourself. You're simply watching from a place of stillness, from what we're about to explore next. Insight 12.5. The Alchemist's Transformation. Between the wounded trader and the 0-point master, there exists another archetype, one that most traders never discover because they're too busy trying to leap from broken to perfect. The alchemist. The alchemist isn't free from fear, greed, or ego. She feels them all, but instead of being controlled by them, she's learned the ancient art of transmutation. She turns lead into gold, pain into wisdom, losses into lessons, emotions into information. Where the fool sees a losing trade and spirals into revenge, the alchemist sees data about her psychology. Where the orphan cuts winners early from unworthiness, the alchemist notices the pattern and adjusts. Where the shadow takes control, the alchemist observes, names it, and chooses differently. This isn't suppression, it's transformation. I discovered this archetype in my own journey, in that difficult space between awareness and mastery. For months, I could see my patterns clearly. My journal was full of insights, but I still couldn't stop repeating them. The gap between knowing and doing felt infinite, until I stopped trying to eliminate my shadows and started alchemizing them. When greed whispered one more trade, I'd acknowledge it. I see you, greed. You're here because I feel incomplete. Thank you for showing me that. Then I'd close my platform. When fear screamed, "Get out now," I'd pause. I hear you, fear. You're trying to protect me from pain. But is this real danger or old trauma? The alchemist doesn't fight the inner voices. She listens, learns, and transforms their energy into wisdom. Jung called this process individuation, the integration of all parts of the self. Not elimination, not perfection, integration. The market becomes her laboratory. Each trade, an experiment, each emotion, raw material for transformation. This is the bridge between wounded and whole, between unconscious and awakened, between who you are and who you're becoming. The alchemist knows a secret. You don't need to be perfect to be profitable. You just need to be conscious. And consciousness, applied consistently, is the philosopher's stone of trading. Insight. 13. The 3-trade identity rule. If I could only see 3 of your trades, I could tell you who you are, not who you think you are, not the disciplined persona you post online, but the real trader behind the terminal, the one who shows up when the plan falls apart, when uncertainty hits, when money's on the line and emotions boil over. Because in just 3 trades, the truth leaks out. The first trade shows how you prepare. Did you enter with clarity? Were you reacting to FOMO or executing a plan? The second trade shows how you respond. Did you follow your system after a win or chase euphoria? Did you revenge after a loss? Did you pause or spiral? And the third trade, the most honest of all, shows how you recover. Did you trade from grounded presence? Or from a fractured mind trying to regain control? These 3 trades don't lie. Because trading is never about one decision. It's about the pattern of self that unfolds when tension rises. Mark Douglas said, "You don't need to know what's going to happen next to make money. You need to know how you'll respond when it doesn't." And that how isn't random, it's identity. Carl Jung believed that we each carry a persona, the face we show the world, and a true self buried beneath layers of conditioning. In trading, the persona is the rational analyst, the backtester, the checklist builder. But the true self is who clicks the button. And when those 2 selves don't align, chaos follows. Here's what I discovered with a trader named Brielle. Brilliant on paper, rigid rules, elegant systems. But her 3-trade pattern revealed something else. Every 3rd trade after a loss, she over-leveraged. Why? Because she wasn't trading to win. She was trading to prove she wasn't weak. Her identity couldn't tolerate being wrong, so she forced the next trade to redeem her. Her system wasn't broken. Her identity was hijacked. So, how do you use the 3-trade identity rule? After every cluster of 3 trades, ask, what story was I telling myself? Who was I trying to be? Was I acting from presence or protecting a narrative? Because your edge isn't just in data. It's in knowing yourself so well that nothing can trick you into betraying who you really are. The market can't be controlled, but you can be understood. We've entered the realm of transformation, the uncertainty master who dances with the unknown, the journal that becomes a mirror of truth, the alchemist who transforms wounds into wisdom, and the 3-trade pattern that reveals your true identity. We're approaching the summit of this journey. Take a moment. Feel how far you've come from that first mirror. You're not the same trader who started this video. And when you finally master that understanding, you don't just change your trades, you change your trajectory. And the next step in that evolution? Becoming the trader who doesn't need a win to feel whole, becoming the one who operates from a place of complete neutrality. Insight 14. The 0-point trader. There's a rare kind of trader you almost never see online. They don't show off wins. They don't rant about losses. They don't need to call tops or bottoms. They just show up every day, quiet, clean, centered. Not because they're robotic, but because they've found something you can't fake, the 0 point. Mark Douglas hinted at it when he said, "The ideal trading mindset is a state of objectivity, where you're not attached to being right or wrong, but simply present to what is." Carl Jung would have called it individuation, the full integration of all parts of the self into a coherent whole. No more inner conflict, no more shadow puppeting your trades. Just clarity, just calm. The 0-point trader doesn't trade to win. They trade to express alignment. Every click is intentional. Every setup is an extension of inner order. They've made peace with uncertainty. They've danced with greed, fear, ego, and desire, and survived. They no longer fight them. They know them. And through that knowing, they transcend them. I met one of these traders. His P&L wasn't the highest, but his equity curve looked like a smooth river. Years of consistency. No drama. I asked him once how he avoided tilt. He smiled and said, "I don't avoid it, I just don't feed it." His secret? Every morning, before he opens a chart, he does nothing. He sits, he breathes, he returns to 0. To that still place where nothing is required, nothing is forced, and no part of him needs to prove anything. And from that place, trading becomes effortless. Not emotionless, but integrated. It's not that he doesn't feel the impulse to chase, to revenge, to over-leverage. It's that he sees the impulse and lets it pass, because he no longer identifies with the part of himself that needs to win to feel worthy. This is the final evolution of the trader, not mastery of markets, but mastery of self, not control over price, but presence through all conditions, not the suppression of emotion, but the transmutation of emotion into clarity. When you reach 0 point, you realize something radical. I am not my trades. I am not my balance. I am not my last win or loss. I am the stillness between the candles. And from that stillness comes power. Because now, you don't chase opportunity. You become the kind of person that opportunity flows to. And that's when the mirror maze ends. Because you are no longer lost in reflections. You are the one who's finally awake. Become the 0-point trader. If you've made it this far, something in you already knows. This journey was never just about charts, never just about money. It was always about the mirror. You've seen yourself now, in the FOMO, in the loop, in the whisper of your shadow. You've met your inner child trading for love. You've seen the archetypes, the gambler, the orphan, the fool, and most of all, you've tasted what's possible when you operate from the 0 point. Now, it's time to bring that to life. So here's what you do next. Step 1. Journal your last 3 trades, not just the outcomes, but the identity behind them. Who was trading? What belief was running the show? Step 2. For the next 5 sessions, before you trade, sit in silence. No charts, no data. Just ask, what version of me is about to step in? Write it down. Step 3. After your next big win or your next painful loss, resist the urge to react. Instead, go to your journal. Let the emotion speak. Turn confusion into clarity. Turn pain into pattern. Step 4. Leave a comment below. What's your shadow as a trader? Is it the need to be right? The fear of missing out? The drive to redeem your worth through wins? Say it out loud. Type it. Claim it. That's how the unconscious becomes conscious. That's how we reclaim our edge, not just in markets, but in life. But here's the bonus step. To help you implement everything we've covered, I've created the 0-point pre-trade checklist. It's a simple 1-page PDF with 5 questions to ask yourself before every trade, ensuring you're operating from your highest self, not your shadows. The 5 questions are, who is trading right now? Warrior, fool, orphan, or alchemist? What am I feeling? Fear, greed, calm, or boredom? Is this trade based on my plan or an impulse? Am I willing to be wrong on this trade? Have I fully accepted the risk? You can download it free in the description below. Print it, use it. Let it be your guardian at the terminal. This channel isn't here to give you signals. It's here to build a mirror so sharp, you can finally see the parts of you that have been placing trades in secret. Because the real edge isn't the strategy, it's the state. And the most powerful state is 0 point. Still, present, whole. So remember this. You don't need to be fearless. You just need to be aware. You don't need to predict. You just need to listen. You don't need to win to prove something. You already are enough. Now go trade like it. End of journey. You've traveled through 15 insights, 3 acts, and countless mirrors. You've met your shadows, confronted your wounds, and glimpsed your potential. The question now isn't whether you understand. It's whether you'll act. Will you remain the trader dying slowly like rust? Or will you step into the light of consciousness? The market is waiting, but more importantly, your true self is waiting. Welcome home, trader. Welcome to the beginning.